And also tracking oil prices today, they're lower as the conflict in the Middle East escalates. 3 US soldiers were killed and dozens wounded by a drone strike by Iran-backed militants on Sunday. Iran denying that, though. But President Biden vows to retaliate, saying in a statement that those responsible will be held to account. As for Iran, the nation's foreign minister is distancing himself from the attacks, saying that accusations of Iranian involvement are, quote, baseless. With tensions flaring, what can we expect the fallout to be for the oil market? Joining us now, we have Scott Bauer, Prosper Trading Academy CEO, and Ayham Kamel, Eurasia Group Middle East Practice Head. So, Ayham, I want to have you first set the scene here in terms of what this means in terms of oil supply and demand, now that we see that this is escalating.
I think in the first instance, there'll be no direct impact on oil supply in the region. I think more likely than not, the Biden administration is creating a calibrated military response that appears very loud in terms of targeting militias in Iraq and Syria to rebuild that lost US deterrence on the military front. But I think the appetite to move into something direct that hits Iran or hits Iranian export, it's still low for now. So I think there's reluctance to do something in terms of tinkering with the oil supplies that might impact inflation expectations and over the long term, even Biden's own position domestically. So more likely than not, we're looking at a contained sort of conflict with a higher risk that it expands. For now, the Biden administration is probably going to be careful.
Scott, let me get your reaction to what Ayham said. I mean, do you agree that potential disruption to oil markets pretty much contained there, and that the broader concern as it relates to the energy space really is about the demand picture, largely coming out of China, too?
No doubt about it. And I wholeheartedly agree. I do think even now with oil prices down today, there's probably about $3 to $4 of risk premium already built in because of tensions in the Middle East, especially with what happened over the weekend. But you can see the reaction today. It really goes to what you guys were just talking about, that the response is probably going to be very tempered. And the bottom line is, oil prices are on their heels right now, and it is all because of demand or lack of it, should we say. We do have OPEC coming out next week, which, given everything that's going on, given the tensions in the Middle East, that could disrupt the marketplace, but I really don't think so. So to me, as a trader, I actually love this extra volatility. And though much of the marketplace is looking at this as a buy the dip, because of the escalated tensions out there, I actually look at this as selling, what we call selling the rip, or selling a move higher, because the overall macro picture of crude is absolutely on the bearish side. Obviously, things can escalate very quickly. You can always have a big pop if, God forbid, something really tragic happens here. So if you're trading it with options or just with futures, you always need to use a stop. But I would look to sell any pop that we get in the near term.
So in terms of the response that we tend to see from OPEC, as we saw with the Russia-Ukraine crisis in the middle here, what sort of response are you expecting from OPEC at the upcoming meeting?
Well, I think Saudi Arabia, who really exactly is the engine of OPEC Plus, will be looking at a very comfortable price range. I think for the Saudis, OPEC Plus in general, any range of oil prices in sort of the 80s is completely acceptable. There's not likely to be a big reaction to put additional barrels on the market in the current environment. One exception to that would be if we saw an escalation of the regional conflict and it begins to impact supplies. Then the Saudis would consider to work more actively with OPEC Plus to try to create some form of relief over there. But currently, given just the demand picture that we've discussed on the show and sort of the supply risks as they are, the Saudis will be cautious in terms of putting additional or taking barrels or putting additional barrels on the market. Stable status quo works for now, particularly given the spending commitments on Vision 2030. And I think that the Saudis can deliver on that. One key point I would just add that yes, there is sort of an intention by the Biden administration to calibrate its response, but military conflicts and regional crises have the tendency to create their own dynamics. Where we are today is not a very comfortable place in terms of risks in general. I do expect additional tit-for-tat sort of military strikes and confrontation between the US and the militias in Iraq and Syria. This is not going to be a comfortable couple of weeks at all.
Scott, let's pick up on that point, because since October 7th, when this conflict began between Israel and Hamas, so much of that risk concern in the Middle East has been about a direct conflict between the U.S. and Iran. It feels like with every strike, you're getting closer to that. Now you've got 3 Americans that have been killed as a result. Within the context of the energy markets, what would be that trigger, you think, that would really lead you to be concerned about disruption in supply when we're talking about sort of looking at the conflict that's playing out in the context of oil?
Sure, and any further escalation of what we saw over the weekend. So direct hits, direct strikes on American interests, on American soldiers. That is where the escalation would be. And this weekend, the tragic events that happened, that certainly is one of those scenarios. As you guys just discussed, I would expect, I agree, some tit for tat. Until that really escalated, though, I don't think it's going to affect the crude, the oil markets, but that's always a possibility. That's always something that's out there. And that's why I said earlier, I really believe there's $3 to $4 of extra premium built into the price of crude right now. We all hope it doesn't happen, right? We all hope that the supply doesn't get affected because of an escalation. It certainly is a possibility. It is not a probability. It is a possibility. As you just said, it's going to be a volatile next couple of weeks here. I would not expect Saudi to do anything at the OPEC meeting. I think the market is already pricing in that they're not going to change their stance, whether it's more supply or even pulling more off of the marketplace. So I think it's still, fairly status quo. And given any big heightened escalation, I think you really have to look for crude to move lower. It's just that it's all about the demand right now, unless there's a big escalation.
So, Scott, a $3 to $4 risk premium already baked into oil prices. In the meantime, though, if you're looking medium term, what are we talking about? Mid 70s, low 70s?
Yeah, I think we could hit 70 to 72 area if the conflict remains where it's at right now. Within the next couple of weeks, I would not be surprised to see that 70, 72. If there's a breakout on the upside above the 81 area, that's where you could see short covering coming in and you could see a big precipitous pop. But I think that 70, 72 area, if the escalation does not happen, that's where we're going.
Well, I appreciate both of you for joining us with your insights and this important context as well. Scott Bauer and Ayham Kamel, thank you so much.